Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and US economy space. And as you guys can tell from today's title, it seems like there might be a shift from banking to crypto and Bitcoin. So if you guys enjoyed today's content, go ahead and drop a like below and subscribe. That way you can stay up to date with all of my most recent videos. But let's go ahead and jump into that CBBI to see where the confidence is at. Because if y'all see, we have done a nice little 180 from where we were headed, and we're going back up. Just about 3 to 4 days ago, we were talking about how, we were actually possibly wrong in looking at a 2015, 2016 case, but we ended up going right back to where we were. So this will be something to pay attention to as we are in this range of kind of new discovery of where will be the next consolidation range for Bitcoin. And sorry about missing yesterday's video. I am currently sick, but I will go ahead and make that up to y'all by doing 4 straight videos to finish out the week, just because I did miss that Monday video for y'all. Let's go ahead and jump over to CoinMarketCap as well, because this is that one-stop shop for everything. And you notice Bitcoin is coming in at $500 billion in market cap again, with Ethereum going above 200 billion as well. And if you look up here, the total market cap for the entire crypto industry is above 1 trillion. And even if you go over here and pull it up on the one that I actually like to use, you can see here that they are also above 1 trillion at 1.1. So it is a good day for the crypto markets, because you can also see here Bitcoin dominance is around 44%, slowly but surely going towards that 50% I'm personally paying attention to. As well as you can see here that we are 16% up on the week, but if you go back to the graph and we go to Bitcoin, you notice just in the last 3 days from the bottom, as it bounced off of that 200-day moving average, we are up 34% in roughly 6 to 5 days. And we had a nice hammerhead candle, which kind of indicated this as also just bumping off of that. So we'll be doing more of the moving averages and reading into the TA in tomorrow's video. But also, if you guys notice, we've been paying close attention to Binance USD, and with the most recent crypto pump, it has officially fallen out of the top 10, with Solana recapturing that 10th spot. And it is only by about about $100 million, $50 million. Well, it just changed. About $40 million market cap buffer, or sorry, no, that's $1 million buffer. And as you can see here, USDC is repegging itself, which I'll call 99.9 pretty good enough, because if you've noticed prior, it has had fluctuations off of the dollar before, so I don't think that's anything to be concerned about. So we're going to go ahead and jump into around the Twitterverse so you can see the real reason why Bitcoin is pumping, and that's because the global clothing brand Guess is now accepting Bitcoin payments. So no, this is just a joke. This isn't the main reason, but it is just showing that the narrative and the social sentiment in terms of Twitter and just how people are feeling, and they're starting to shift to these bullish narratives. We're not just hearing about people, canceling or stopping trying to, grow on Bitcoins that were growing in the crypto space. We're now having more stories of, people are now accepting Bitcoin as payments. Also, one of the best indicators, Jim Cramer told everyone to sell their Bitcoin yesterday, and ever since he did say so, your Bitcoin, we've had a nice pump of 7%. So those are 2 jokes, but I thought it was funny because there is the ongoing joke in crypto that Jim Cramer constantly, just actually in the financial industry, that whenever Jim Cramer says something, that you should probably do the opposite. And to close out around the Twitter space, which is going to be the segue into our next topic, we do have CPI coming in at 6% today, and that is exactly where it was estimated at, as well as core CPI, which is just everything without energy and food, coming in at 5%, which is also where it was estimated at. So we're going to go ahead and jump into the numbers, and you can see right here that food is still very high at 9.5%, as well as energy is one of the key components of what's breaking down the all items, because if you go into this chart, you can see here it did have another 8% and or 8 point decline and 7.9 point decline. But I think this could be a nice leading indicator because, as y'all remember in prior videos, whenever we were discussing this, fuel kind of runs transportation, transporting food, transporting yourself, when you're having a vacation. So as energy is constantly still going down, this could have a ripple effect. Also, with it having a slight decline, so we are still going up in the inflation factor, but it doesn't appear that it's going up as fast as it is anymore, because with it coming down from 0.5, it at least shows that there's a 0.1 step back of it increasing. Also, it is important to pay attention to CPI and the labor force, because this is the two main factors that the Fed is paying attention to for their next hike. Because we did show y'all last time that we are coming in at around a 50 basis point hike, just based off of the meetings they've had last week and the emergency meeting yesterday. But Meta is going to lay off another 10,000 workers, so this is interesting to pay attention to, because this might actually impact the CME group decisions to go down lower, because as you can see here, it is still just going up at 80%. So we'll constantly check this. We'll make a video on it with a week to go until their next meeting, which will probably come out Friday, just going over it, or Monday. But let's go ahead and segue into some potential reasons why Bitcoin's going up. And as you can tell here, the crypto-friendly signature bank shuts down, and this is now the third major bank that has collapsed in under a week, following Silvergate and Silicon Valley. And the FDIC, who kind of is the insurance, has already come out and said they're going to make everyone whole. Because typically how it works is the FDIC insures only $250,000 per person per bank. So if you had multiple accounts at the bank, it would still only be 250, but they've already kind of come out and said that they're going to make everyone whole, that there won't be any issues. And this is one of the possible reasons why we've seen the USDC Repeg, because they ultimately lost $3.3 billion to this bank collapsing, and this had them surge all the way down to 87 cents, as they were only supposed to be tied to $1. And as y'all saw in CoinMarketCap, we are back at that 99 in some hundredths. But with them saying that they're going to make it whole, they're essentially going to recover most of that 3.3 billion, most likely 90% of it, as y'all can see here, which is going to get them back to that one-to-one asset, as well as when some people were selling out of it and going into the Tether stablecoin, because you can just see that there was a huge shift in the dominance from USDC, and it still is changing from USDC to Tether. It's almost now double it. And both of them are on a decline right now, because you can tell Bitcoin's just shot off out of that bull flag that we were paying attention to. So you can probably ultimately see, just with the quick, it go up to 47, which is close to that 50. But when people are selling out of the USDC and switching it into Tether, during this probably time right in here. Ultimately, they were burning some of the USDC to get it repegged, as well as now that the FDIC already said that they're going to fully insure most of the money back to these companies. It is just a bullish sign for crypto. Now, in terms of the traditional markets, it is what people are calling a dark day. Because ultimately, Bitcoin, as y'all can see here, is surging 20%. And Bitcoin is one of the bank's biggest competitors. Essentially, people believe Bitcoin will make people be able to self-bank themselves. And you can't do a bank run on Bitcoin because the problem with today's banking is they're on fractional banking reserve. So you don't have to hold a dollar to dollar ratio for however much money you're claiming to hold in your bank. So if you have, let's say, $100,000 held at the bank only really needs to have a dollar of that held, and then they can go and loan out the other $9 to a different bank. So that's kind of how the banking system is set up, which is why you can see there's a lot of skepticism going on with it, because it doesn't take much for a group of individuals to go and do a bank run and try to pull all of their funds out, because they're really only holding 10% of what's being said is held. So it's kind of funny because you see all of these crypto exchanges coming out and saying we are seeing a huge inflow of new customers. People are realizing the importance of sound money with no counterparty risk. And also, you can't bank run Satoshis. We are hitting record volume highs. And it's just kind of funny because the traditional banks are struggling to maintain their trust for their customers, and that's kind of the entire point of Bitcoin. Satoshi Nakamoto, who was the engineer for Bitcoin, the creator of it, said the root problem with the way we do traditional fiat, the way we do the conventional currency system, is it requires all of the trust in the Fed, the people who kind of control the printing of it. And as y'all can tell with the most recent events that has happened, they're not the most reliable. They'll turn on the printer and inflate the money to where now you're spending $20 for eggs. You're going out and buying $12 for just a meal through a drive-through now, where before we were getting dollar menus and value menus, and now those value menus are $4. Oh, buy 2 things for $5, when it was, oh, buy one thing, get it for $1, or maybe you get some bacon on it for $2. So that is why you've kind of seen this inflow into cryptocurrency with just the market cap increasing. Well, that's not the market cap, that's the percent, but with the market cap, as you can see, we've finally hit ahead of that new local high, and I could see us going up to 1.2 or hitting up our head against that 1.18. So I just think there's now people are actually witnessing it firsthand experience of why the shift is needed to go into Bitcoin, whereas prior, most people were just skeptical on it. They're like, oh, there's no way the banks are failing. That's only happening in 2008. And, well, now we've had 3 collapse in the last week. So that's all I have for you all today. I hope you guys enjoyed today's content and you are seeing the use case for Bitcoin more and more every day. But stay safe out there. Bye-bye.